What happened to the post-war premium that so many people thought would stay in this price?
Yeah, I think markets are increasingly challenging that premium because the sharpest oil supply shock in history has somewhat ambiguous effects. Yes, I think we're learning that supply disruption risk is higher than widely believed. On the other hand, I think we're also discovering that there's potentially more flexibility in the system on the demand side, in the Middle Eastern supply picture from a pipeline perspective. And so maybe this idea that you need a very large sticky security premium is being challenged by markets right now.
So right now, do you see it continuing to rapidly decline because of the demand destruction that will stick in China, because of the increased barrels, because of the increased production from the UAE? What exactly are the factors that you see at play?
Yeah, I think oil prices are coming down pretty quickly for three reasons. One, reopening is going well and quickly. We estimate that total oil exports from the Gulf already back at 60% of pre-war levels over the last week. Second, I think markets are challenging this idea that you need a sticky, large security premium for the reasons we discussed. And third, I think markets are putting some probability on the possibility that oil demand will be structurally weaker as a result of the shock. Our base case is that 90% of the 5% global demand oil losses that we saw in the spring bounce back, as has happened in the past, in 2022, 2011. But with the rise of EVs, and EV sales are surging, it's a fair question to ask, how confident can we be that most of the demand comes back?
Is that China? Is that Europe? Is that also in the United States in terms of the structural demand destruction that's at play?
Mostly China and then Europe. If you look at the 15 largest EV markets, 13 out of the 15 EV markets saw big increases in the share of EVs in sales since the start of the war, with a global average increase in EV sales of about 3.5 percentage points. But look at China. We had an 11 percentage points increase in the EV share of sales. It just seems that China is responding more quickly to the largest oil supply shock ever, and China crude imports remain down 40%. Our assumption is that if prices moderate, China will go back to the crude markets, start refilling inventories, but we can't be sure, and I think the market is testing that assumption.
Dan, on the heels of the OFAC waiver, where's the Iranian crude going? Still China, or do you think more customers will be willing to buy?
Mostly China, and I think that India is likely going to be the second most important buyer.
What do you make of the president basically saying oil companies are price gouging? It was in the middle of the night, you might have missed it, but he was up, looking at oil prices and saying this is where Brent and WTI are. Why are not gasoline prices across the United States falling as quickly?
Yeah, I think it has to do with the seasonality of gasoline prices, which tend to be higher in the summer. And in general, there tends to be a lag of about 10 days or so between wholesale prices on Wall Street and retail prices at the pump. And then third, structurally, we think that refined product markets are tighter than crude markets.
What did the bulls get wrong in the last 3 months? I feel like the industry scarred a little bit. And by industry, I mean strategists who are looking at this situation, not necessarily yourself. What did everyone get wrong?
I think we, as a community of analysts, and I think also most investors, I mean, at some point, oil was at 120, have underappreciated the flexibility in the system, whether it's China oil demand, whether it is storage facilities and pipelines allowing the Middle East to reduce production losses, or third, the strength of supply outside of the Middle East. We estimate that global oil supply as of May was up 3 million barrels per day year over year, with very strong growth in places like Brazil and the US.
How powerful was the China pivot? How important has that been in the last 3 months or so?
Critical.
Yeah.
Chinese crude imports dropped from about 10 million barrels per day to 6. So that's 4 million barrels per day of less demand for crude. And you see it especially in the Middle Eastern grade prices. The so-called Dubai oil price is now in contango, meaning that you actually get a discount to buy a barrel now versus a barrel tomorrow because of the weakness in the Asian pull on Middle Eastern grades.
It's kind of crazy when you think about it, and you don't have to respond to this, but from a political perspective, China actually bailed out the situation for the president. Now, I'm not saying that was their objective. I'm saying that was the outcome, the consequence of their pivot.
Yeah, China helped actually the global consumer as well throughout all of this. A lot of things had to go right. think about Bab el-Mandeb Strait, the Houthis didn't get involved, the fact that we had a glut, the fact that we are seeing oil in other places, we were able to run off inventories. But then, of course, the biggest, of course, was going to be China. They really have their thumb on the scale when it comes to the oil market.
It made a lot of people turn their focus away from the oil market to other critical minerals, rare earths in particular, because that is not something that can be replaced so easily. And one thing that Scott Bessent, Treasury Secretary Scott Bessent, said last night was, in today's economy, supply chains are the domain in which that leadership is tested. And ultimately, that, to me, is the stockpiling that we're now watching, not just oil.
Has the phone gone quiet? You're getting some nice rest now? Because I'm sure it was off the hook.
Time to look at other commodities, finally, right, including rare earths, metals. I'm excited. Resources are freed up.
It was bored of talking about crude as well.
Well, yeah, because this is where the actual action is going to be.